Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we're starting from the dollar index. This is the monthly time frame. So you must understand that I've been making emphasis to this monthly bullish fair value gap, how we want to see price trade into that zone before we could anticipate any form of the possibility of a bullish reaction. And what we can clearly see is that still within the month of April, we have that delivery now where price now traded into the monthly bullish fair value gap, taking out this monthly sell side liquidity, and we can see how price reacted and gave this bullish reaction to the upside. So we are still anticipating to see how price would close in the month of April, and then we look forward to the coming new months. So what we can see here is that we have the mitigation of our drawn liquidity to the downside. We had the sell side drawn liquidity, and where we anticipated the mitigation is this bullish fair value gap here in the monthly time frame, and price have successfully traded into that. So we are still waiting for the month of April candle to be fully established. So let's check the weekly time frame. Here in the weekly time frame, within the monthly bullish fair value gap zone, if you can remember, in the daily time frame I pointed out that we have a bullish order block which we want to see price trade into. That bullish order block should give us a reason to see a buy reaction. So clearly now what we can see is from the weekly, this is where we have the sell movement. The institutions give a discount price before further sponsoring bullishness that took out this high point. So price traded into the monthly bullish fair value gap zone, which in the daily time frame we're going to see a bullish order block. And that bullish order block gave this rejection to the upside. Price here have successfully taken out the sell side liquidity. In extension, we have this pool of sell side liquidity resting here that price is sticking out. And what we can see, we have this weekly bearish fair value gap. So with such rejection, I'm anticipating the possibility of what bullishness to the upside. Price should take out this what buy side liquidity into this weekly bearish fair value gap. So we have to wait to see the model that price will create when price return into the sponsorship zone, which is this weekly bearish fair value gap. If price gives us a sell model, then we could see sell continuation. What am I trying to say? I'm trying to say this is what we anticipate in the possibility of bullishness into this weekly bearish fair value gap. In lower time frame, if price gives us a sell model, then we want to continue then bearish to the downside. So except price gives us a clear sell model, when price trades into this weekly bearish fair value gap, then we can now take sell continuation to the downside. Or we could see price just continue bullish, since now price have mitigated this monthly bullish fair value gap. But for the most recent price delivery we're anticipating is to see bullishness into this weekly bearish fair value gap. So from the weekly bearish fair value gap, we now look forward to the possibility of sell model in confluence to lower time frame zones that will be established for us to see the possibility if price is going to continue bearish to the downside, because the dollar index is actually what bearish. So let's check the daily time frame. Here in the daily time frame, what we can see from the monthly bullish fair value gap zone is the daily order block I pointed our attention to previous week. The bullish order block in the daily time frame within the monthly bullish fair value gap zone, and that is where we can see price return to mitigate. So once price mitigated that, what we can see, this is the last down close candle before we had this bullish engulfing candle, and what we can see now, price traded back and mitigated the volume of this last down close candle before this engulfing bullish candle. So what we can see is that price is trading in between this bullish order block and this bearish order block. And the draw on liquidity we have to the upside is the weekly bearish fair value gap, which in the daily time frame we can see this liquidity gap here. And we can also see the daily time frame bearish fair value gap. So it means if price trades to the upside and decide to trade more deeper to the upside, then we're looking at price trading more higher into this daily bearish fair value gap. Then we have to wait to see the model that price will create. If price will give us a sell model, once price fully mitigates these sponsorship zones, then we can anticipate what sell continuation to the downside. So now we can see price have mitigated the monthly bullish fair value gap zone and has given us this bullish engulfing candle. Here price return face rejection, though we have a form of consolidated price delivery here because price is also reacting at this bearish order block. So we have the possibility that price will go bullish and violate this bearish order block because we have this drawn liquidity here to the upside. The institutions are likely to want to fill up this liquidity gap before we have the possibility of what bearish continuation, or we could see further bullishness to the upside in the dollar index. But for the most recent price delivery we're anticipating is to see how this daily bullish order block is going to hold price to the upside into this weekly bearish fair value gap. And we can see here we have this daily bearish fair value gap. Let's check the 4-hour time frame. Here in the 4-hour time frame, what we can see is how price filled up this liquidity gap here, and we can see a price return to retest it, giving us this bullish reaction. But then we can see a price is trying to trade to the downside. So clearly it means that if price is going to trade lower, I want to see how price trade lower, taking out the sell side liquidity, price can decide to respect this zone, which is still the daily bullish order block zone, and then we have the bullish continuation to the upside. If price decides to dip any lower, then it is to this 4-hour bullish fair value gap. And then if price gives us a buy model here, then we buy to the upside. And if price decides to continue bullish here, because what we can see is price filled up this liquidity gap. Let's identify that we have this liquidity gap, price filled that up, and we can see that price is trading above that. So we could see what bullish continuation. So clearly, what am I saying? What I'm pointing out to us is we could see the possibility that price may just continue what's bullish, but we have this liquidity gap here, so it might decide to trade lower, and then we see what bullish continuation into this weekly zone. And from this weekly zone, then we can begin to look at the possibility of what sell model, because within the weekly zone here in the 4-hour time frame, here also we have that liquidity gap here. So we could see price trade into that zone. So if price gives us a sell model after trading into the zone, then we could have what bearish continuation to the downside, or price may decide now to trade more lower to the downside into this 4-hour bullish fair value gap. If price gives us a buy model, then we anticipate to buy to the upside into this weekly zone. So this is my anticipation in the dollar index. This is what I'll be looking at, the possibility of this delivery. Then when price trade into the zone, we can look at the model that price would create here. If price gives us the sell model, then we want to sell, continue selling to the downside. Let's check the 1-hour time frame in the dollar index. So this is the 1-hour time frame in the dollar index. What we can see in the 1-hour time frame here in the dollar index is the fact that we have this bullish order block within the 4-hour bullish fair value gap. And what we can see is price here returned but did not retest the volume. Price went bullish, broke this high, and we can see that liquidity gap here. Price is trading there. So it means that if we have the possibility of bearishness into this gap and price decides to go bullish from there, then we want to go bullish to the upside. But if price decides to trade more lower to the downside, where we have the 4-hour bullish fair value gap, we can see here we have this bullish order block in the 1-hour time frame. So it is when price violates this bullish order block, then we would know that we are going to continue bearish to the downside. If price return to mitigate this and doesn't give us a buy model, then we know we are going to continue bearish to the downside. So this is all I have to show us in the dollar index. Let's check out the Euro USD pair, guys. This is Euro USD. Last week I told us we want to see how price takes out this buy side liquidity, and here we have this buy movement before the sell movement to the downside, and we can see how price traded into that, taking out the buy side liquidity because this established relatively equal high points to us. I clearly pointed that out from this weekly high and also this swing high point. So I told us I want to see how price further continue bullish to the upside. So in the daily time frame, we saw where price established a bullish order block, and I told us we could see price continue bullish from that bullish order block, and clearly price continued bullish from that. So now what we can see is price have mitigated this up movement, this buy movement before the bearish movement here to the downside, basically an institutional order flows on here, and we have this bearish rejection to the downside. Price has taken out buy side here, and in extension this buy side, and what we can see is that volume closed below, and we have this bullish fair value gap here in the weekly time frame. So from the weekly time frame, clearly what I'm anticipating to see is the possibility of price taking out the sell side liquidity and then deepen into this bullish fair value gap zone, and we could see the possibility of continuation to the upside. We want to see the buy model that's the market is going to establish for us here to give us the possibility of what bullish continuation, because in the Euro USD we are what bullish, in the dollar index we are what bearish. So I'm anticipating to see how this trade into the zone. So I'll be patient to see if price establish a buy model, then we buy to the upside. And now also in lower time frame be looking at the opportunity to leverage what the bearish movement, if that is clearly established from lower time frame like the 1 hour, 15 minutes, 5 minutes time frame. And then I trade bearish to the downside into this drawn liquidity to the downside, anticipating this would take out last week's low points, this previous 2 weeks low points, so and trade into this bullish fair value gap and give us a buy model to want to see the possibility of bullish continuation. So it means that the most recent anticipation is the possibility of price trading into this zone first, giving us a bearish movement to the zone first before we can now anticipate the possibility of what bullish continuation to the upside. So let's check the daily time frame. Here in the daily time frame, what we can clearly see is, last week, this is the bullish order block I pointed our attention to, because we had this Thursday candle and then we had the Friday candle. So I told us we could see price continue bullish to the upside to take out the buy side liquidity, this buy side and this swing high point buy side liquidity, which price traded to that, and now we saw price giving us what's bearishness to the downside. So clearly I'm looking at the possibility that price will take out this low, this sell side liquidity. So this is the weekly bullish fair value gap zone. So it means if price is going to dip more lower, meaning price would dip into this daily bullish fair value gap, and then we have what the bullish model to the upside. So I'm anticipating to see bearishness, the possibility of what bearishness to the downside into the zone, and from this zone we can look to continue bullish if that presents a clean buy model to us. Let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is the delivery here is just a range bound delivery. We can see how price is just, we had this movement, price fell, movement, price fell, movements. What we can see, this is the last up close candle before this bearish movement, but this failed to take out this low. Price return, reacted at it, mitigation, bearishness, price again return, reacting at it again. So here we have what sell side liquidity, pull of what sell side liquidity, relatively equal low points. So I'm looking at the possibility that we could see price takes this out and want to see price trade into this. If price gives us a buy model, then we are establishing our bullish movement to continue bullish to the upside. So this is what I'm looking at to see in the Euro USD pair. So it means that if in the Euro, we are having Euro trading into this bullish fair value gap, then in the DXY, we'll be looking at DXY trading into the bearish fair value gap. So this is what I'm anticipating to see in the Euro USD, the possibility of this delivery. Let's check the 1-hour time frame. So in the 1-hour time frame, we can clearly see that we have price just created this range bound market delivery. We have this pool of what sell side liquidity. Also, we have this buy side liquidity. So we could see the possibility this may continue bearish, or price may seek the buy side, and we have price fall to seek the sell side. Price presents a buy model, then we want to continue bullish to the upside. So this is what I have to show us in Euro USD pair, guys. So let's check out the GBPUSD pair. Here in GBPUSD, the weekly time frame, I identified this last week to us as the drawn liquidity, this weekly bearish fair value gap. I want to see price trade higher to take out this. In lower time frame, also identify a bearish fair value gap zone as a drawn liquidity, which price now here traded into. So we still have this from the weekly time frame, and we can see price here giving us relatively equal high points, buy side liquidity resting here. And what we have is this weekly bearish fair value gap here, which we refine in the daily time frame. We can see here we have it now going to serve as an inversion fair value gap. So from this weekly time frame, to have a bullish continuation, we want to see price possibly trade into this as an inversion fair value gap, and we have price trade higher to the upside because we have this buy side liquidity resting here. So from the weekly time frame, this is my anticipation for the GBPUSD, except price decides to continue just bullish to take out the buy side liquidity. But I'm anticipating the possibility of price giving us a pullback into this. So retest this as an inversion and we have the bullish continuation. But then we have to check lower time frame to look at the lower time frame delivery and the structures also in the lower time frame. So let's check the daily time frame. So here in the daily time frame, what we can clearly see is the daily bearish fair value gap, which is going to serve as our inversion fair value gap here. And we can see we have this relatively equal high points here, meaning we have what's liquidity resting here. And this is the weekly drawn liquidity to the upside, the weekly bearish fair value gap. So what we can see is price here, return here, mitigated the zone, tapped a little into this fair value gap zone, which is an inversion fair value gap zone, tapped a little into that. And we saw this bullish candle to the upside. So if price keeps trading above the mean threshold of this engulfing candle, then we could just see bullish continuation and price may not necessarily trade into this inversion based on the weekly time frame anticipation. And then we have the bullish continuation to the upside. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see from the 4-hour time frame is we have price traded to the upside here. We have this pullback and price traded again, taking out this high, and we saw this bearishness to the downside. The structural delivery here is not really clear. So you could either wait to see how Monday trades, but looking at this, we could see the possibility that price may keep respecting this block, and then we could see price trade lower to the downside. So within the weekly inversion fair value gap, what we have is here we have this down close candle here before this bullish movement to the upside. Here price return took out the sell side. So we can just consider this as relatively equal low points if price is going to trade bearish to the downside. Then we're looking at price reacting at this bullish order block, and then we could see the possibility of buy model to continue what's bullish to the upside. That is if price doesn't continue bullish from the most recent price delivery here, which we established from the daily time frame by saying if price respects the mean threshold of this engulfing candle, then we could see bullish continuation to the upside. So in the 4-hour time frame, looking at that, what we can see is price here return to the downside, reacted at this structural low points here where we have the sell movement that took out the sell side liquidity before this bullish movement that took out this high. So we can see how price returned to that and this rejection to the upside. So all of this traded within this candle, and here we have this movement to the upside that took out this candle high. And now we have this pullback reacting at this down close candle before this bullish movement that took out this candle high that has the lowest low points. So if price decides to continue bullish here, then we want to continue bullish with price to the upside. But then if we see bearish delivery, then we want to trade bearish to the downside to this bullish order block. So if price gives us a buy model from this, then we want to buy the GBPUSD also to the upside. Let's check the 1-hour time frame. Here in the 1-hour time frame, what we can clearly see, this is the 4-hour bullish order block zone. So from the 1-hour time frame, what we can see is how price have traded here to the downside. Price took out this buy side, fell to the downside, impulsive bearish movement. We have this push to the upside, also seek this buy side liquidity. The volume did not close above that. So we can see here price respecting this down close candle that sponsored this engulfed candle. Price returned, retested that, and we are seeing this bullish reaction. But what we are seeing here is the possibility of what price trying to fall to the downside. So from the 1-hour time frame, if you're anticipating to want to take bullish or bearish, you want to see how price trades to the downside here. That is if the bullish continuation would still respect and continue bullish. So we have this down close candle before this bullishness. So if price violates this, then you want to trade bearish to the downside into the 4-hour bullish order block, which is within the inversion fair value gap zone from the weekly time frame. So this is just what I have to show us, guys, in the GBPUSD. What I'm saying is we want to see how price trade into this. If price is going to fall from this delivery here, falls to the downside. So we want to see the reaction here. If price violates this zone, then we want to sell to the downside into this zone. And then we look for buy model to see the possibility of what bullishness to the upside. So this is what I have to show us in the GBPUSD pair. Here in USDJPY, I pointed out towards that I want to see what bearish to the downside, but then we have to wait to see the reaction at the rejection block here, which clearly we would see that rejection block in the daily time frame. I told us before we have that strong bearish reason to take out the sell side liquidity, we may see the possibility price will react at the rejection block and give us bullishness, and clearly that is what we can clearly see here. Why did I point out that fact? What we can see is that this low took out sell side liquidity, sponsored bullish movements, but failed to take out this high. So we know that price would want to aim to take out the sell side. But the fact that this took out the sell side liquidity and we had a rejection block zone, which clearly we would see from the daily time frame, I told us to trade bearish to that rejection block zone before we would now see the possibility that price may continue bearish, or we could see bullish reaction. So when price traded into the rejection block zone, we had bullish reaction, and this is that bullish reaction to the upside. So the drawn liquidity to the downside is this bullish weekly fair value gap, which I'm anticipating to see that price has the possibility of trading more lower to the downside in the USD JPY. So from the weekly, we have now this weekly bearish fair value gap zone here established, and we could see price now continue trading higher into that, and then we have what the bearish continuation. So price would trade higher into this candle wick. Such candle wicks are also sponsorship zone. I'm not going to teach about that here. So we could see price trade into that before we have what the possibility of our bearish continuation. So we have to wait to see the sell model in lower time frame. What am I saying? What I'm clearly pointing out is we want to see how price again trade higher, and then we are anticipating to see the possibility of what bearish continuation. So in the long term, this is what we could see happen. So we may not necessarily see the bearish impulse immediately into this drawn liquidity to the downside, but this is what I'm anticipating to see the possibility of a buy move. Then in lower time frame within this candle week here, we're going to identify a sponsorship zone in lower time frame. So want to see the mitigation of that, and the mitigation of that should give us a clean, clear sell model to anticipate bearish continuation to the downside. So let's check the daily time frame. So here in the daily time frame, what we can see is the rejection block zone here. So we can see this was Friday's delivery. We can see how Monday traded to the downside, Tuesday also traded to the downside into the rejection block, and we saw bullish reaction to the upside. So you can see I told us candle wicks are also what sponsorship zones, and what we can see is that the zone we anticipated, the zone we marked out from the weekly time frame, here we can see it in the daily. We have this buy movement before the sell movement to the downside, and we can see in the daily time frame we are what bearish. So we could see the possibility of this bullish continuation, and price will come mitigate this buy movement before the sell movement to the downside that took out the sell side liquidity. So we could see price trade into that zone, and then if price gives us a clean, clear sell model here, then we want to continue what bearish to the downside, except price decides to trade more higher and take out this buy side before we have what's the possibility of what sell continuation to the downside. Let's look at the basic price action analysis. So we can see here we have what a trend line. So we could see price dip more higher, and then we have what the bearish continuation. But I'll keep my eye on this particular institutional sponsorship zone to see how price trades into that. If price gives us the clean sell model, then we continue bearish to the downside in the USDJPY. Let's check the 4-hour time frame. So here in the 4-hour time frame, clearly we can see in confluence to that zone that we marked from the daily. Here we can see we have this 4-hour bearish fair value gap. This has been a zone we've been looking at, because, you know, last week I told us we want to see price takes out the trend line liquidity, and if you're going to have bearishness, we want to see price trades into the zone. If price gives us a sell model from this zone, then we want to sell from this zone to the downside. And what we can see is that price has taken the trend line liquidity, and we are seeing bullishness. So price has the possibility to trade into the zone. So we have this zone to anticipate to see the sell model from, and then we can sell from that zone, except price decide to trade more higher into this fair value gap zone to want to take out this liquidity. But what we can see is that this took out this buy side, mitigated this 4-hour bearish fair value gap, and sponsored this movement to the downside. Now price has taken the trend line liquidity, so we could see the bearish model here, and we have bearish continuation to the downside, except the dollar index decides to now establish more bullishness to the upside. So this is what I have to show us in USDJPY. So let's check out the gold pair, and that brings us to the end of the weekly forecast. Here's gold from the weekly time frame. So what we can see in gold is we anticipated more bullish continuation in gold last week, and we saw that bullish continuation. Price has created a new all-time high and a rejection to the downside, taking out buy side. Volume closed below this previous weekly candle high points. So from the weekly time frame, clearly, if we are anticipating to see bullish continuation, is to see the possibility that price now will trade into this bullish zone, which is a weekly bullish fair value gap, and then we have our bullish continuation to the upside. So this is based on the weekly time frame. So let's check the daily time frame. Here in the daily time frame, what we can see is, last week I told us we could see the possibility of a bullish continuation. Price will create a high and then return to the daily bullish fair value gap zone, and then we could see another bullish continuation to the upside. And clearly that is what we can see happening here. We identify the possibility of that bullish continuation in the 4-hour time frame. So what we can see here in the daily time frame is we have seen the delivery of price here to the downside, bearish delivery, and that's, I think, began on Tuesday, how we saw price trading to the downside in the gold pair, and price traded into this daily bullish fair value gap zone. Here is where we have this rally, base rally. This is where the institution sold, gave discount price before continuing bullish to the upside. So we can see how price returned to that. So this is actually the down close candle that sponsored this bullish movement. Price left this bullish fair value gap, and we can see how price traded into that. Price respecting the mean threshold of that bullish fair value gap. So price may not necessarily trade to the weekly bullish fair value gap zone before we have bullish continuation. So we could just see the bullish continuation to the upside, since price here is respecting the mean threshold of this daily bullish fair value gap. So we could see what bullish continuation to the upside in the gold pair. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see from the 4-hour time frame is the daily bullish fair value gap zone. This is the weekly bullish fair value gap zone. So in the 4-hour time frame, we also have the 4-hour bullish fair value gap zone. So we can see how price have traded into that, the daily bullish fair value gap zone, and into the 4-hour bullish fair value gap zone. So we can see here price took out the sell side liquidity. So price gave us this rally, base rally. Price gave this pullback and pushed again to the upside. Price went down, seek the sell side liquidity, mitigating this daily bullish fair value gap. In confluence, we have this 4-hour bullish fair value gap. And now what we can see, we have bullishness, but then the bullishness did not continue more bullish. And now we saw price again return to the downside, reacting at this rejection block, and we are seeing bullish reaction to the upside. So clearly what we can see now is price has taken sell side liquidity here. It means if price is going to continue bullish, we have this buy side liquidity, in extension the external buy side liquidity. So I'm looking at the possibility that price may just continue bullish from this delivery and not necessarily have to dip into the weekly bullish fair value gap zone. So we just have to have an open mind and look at the delivery first to see how we're going to trade. But gold is bullish. So let's check the 1-hour time frame. So here in the 1-hour time frame, what we can see in the 1-hour time frame is the bearishness, the bearish delivery that started on Tuesday. After London session took out the Asia session high, we started having this bearish movement to the downside. Price traded into the daily bullish fair value gap. In confluence is the 4-hour bullish fair value gap, and here we have this bullish reaction back into this bearish order block. Here we had this pullback before price sponsored bearish movements that took out this low points. So we can see how price traded back into that, fell to continue bearish to take out this low point. Price again returned to the upside, retested that, fell again, failed to continue bearish to take out this low points, and now we are seeing this bullish reaction. So if price is going to give us a sense of a pullback, what we are going to look at is how price reacts at this zone. So we could see how price reacts here, with the possibility that price may give us a buy model to trade bullish into this bearish fair value gap, or price may just continue bullish into this fair value gap zone. So if you're looking at a bearish possibility because of this bearish delivery to the downside, then you want to see if price gives you a bearish model here, then you may decide to want to go bearish to the downside. It means if we have price just continues bullish into the zone, then you might drop to 5-minute time frame to look at the possibility that price may give you a sell model and then you want to trade bearish to the downside. But you must understand that gold is what? Bullish. So we could just see price just gives us that what? Bullish continuation to the upside. So it means if we have that strong bullish continuation, price fills up this bearish fair value gap, then we may see the possibility that price would return to retest that as an inversion. And then we have what? The bullish continuation to the upside. So this is my anticipation in the gold pair. That is, if gold doesn't give us what? Bearish model here to trade to the downside with a possibility of seeing bullish reaction here, or price may take this sell side liquidity to mitigate more into this fair value gap before enhancing bullish continuation. So this is my anticipation for the gold pair. This is what I'll be looking at to see if price trades above this bearish fair value gap here in the 1 hour time frame. I want to see price return to retest that and then bullishness to the upside. So this is my anticipation in the gold pair.